Good morning, everyone, and welcome to another Elliott Wave Forecast intraday video. Guys, first of all, happy Thanksgiving to everyone that is celebrating. Today is November the 24th, around 10:50 a.m. New York time. Guys, we're going to take this occasion to refresh in what the euro dollar can be doing on the weekly and on the daily chart. Why do we want to do that? It's because the idea that the euro is at a very defined point when the euro can be on the move for a big move, but at the same time, I mean, it's kind of, it can go both ways. It's technically, it can go both ways. Now, let's start with the weekly chart. As you guys know, on the series, we are presenting three different euro-dollar weekly charts, this being our primary chart, our primary count. In this count, we are calling that the euro is since the low of 2008 at 123.29. We are presenting that the euro is in the sideways consolidation triangle form structure. This structure can be either in the E way, or this structure can be either still within the D. Now, let's take a look at the large picture of the consolidation. Starting from here at the low on October 31st on 2008, we have 3, 3, 3, 3. Now, here is where getting interesting. I mean, technically speaking, if you take a look at it, we got a three-weight A, a B, a C, a D, and we can call it completed. I mean, that's no issues to call it completed right there. Technically, you have the 5 swings within the triangle. Now, what it matters the most is that this decline from here to here, it looks corrective. So technically, it's not the trough for the triangle yet. It's not this. This is what I mean. It's not these lines which it needs to trough, and I mean, it needs to trough lower. Now, that's going to give us two alternatives when we downgrade to the daily chart. First of all, let me show you also the idea that this trend line between the lows at 118.77 and the lows at 133.60, 133, this low 131.45 is going to be tested within the next 24 hours, most likely. A break below that trend line is going to invalidate the idea that we're going to go higher in the C way of E, and then it's going to put this trend, this count in place with an alternative to be the D way. Now, let's downgrade to the daily chart, and let's not complicate the things right here. Okay, on the daily chart, we're going to start with our primary count so far. Our primary count on the daily chart is calling for this. Remember when the euro was around this area, we were screaming, saying that the bounce is going to happen. Why? Because we knew at that moment that a three-way move is taking place, and we knew at that moment that the cycle that started on May the 4th, it needs to be correctly. Exactly that's what the market did. It bought the euro with the same issues that are taking place in euro right now, and rallied from 141 to 142, 47 and a half. Now, this decline, it looks corrected. It is 7 swing. Look, the trend line as today comes around 137.75, and we are expecting buyers around that area. Why? Because if this count is going to take place, this trend line should be respected. I mean, it's a powerful trend line from the two lows, from the A of the triangle and the proposal D, so it needs to hold. So any move below this trend line in the closing basics will invalidate this count. Now, this count is going to make a significant low today or tomorrow, and then the euro should rally, I don't know how, to 144.16. And guess what? The 144.16 is also the area that we've been targeting for a while, and it can be 144.16 to 145.28 area before a more important decline is going to take place in the euro. That's a scenario scenario one. Now, the second scenario is also possible. Is this scenario? Is that the trend line is going to be broken. Still, this is a 7-way double zigzag corrective move. The euro is going to bounce back in 3, but the bounce is going to be minimum compared to the previous that we were proposing within the wave E. So with that in mind, what's going to happen is that the euro is going to bounce in the S way, and then the euro is going to correct for about, I would say, 7 to 10 days to the beginnings of December, and then the cycles is going to turn lower again, and the euro is going to go lower in 3 ways, looking for an idea target of 124.22. That can be the case. And then with that in mind, the selling around this area is going to be amazing good. Now, how do you know as a trader which one it is? First, the trend line is a very, very huge, indication there. Also, the candles in the recovering, like we were telling yesterday, the candle in the recovering or the move on the daily basis within the recovery can be also very huge right there. And then we want to know when the euro gets to around 137, 138, if that's being the case. Now, let me mention, getting back to the weekly chart, another alternative. Another alternative is that this is wave E. Still, you're going to get, if that's the wave, that's the complete triangle there. Let me take this. Let me make it for you 1 second. If that's the complete triangle there, this is what's going to happen. We are labeling this decline as a 3-way move, as you guys see. That means that the trust for the triangle can be in 3. That's why it's so important that after the 3 ways back here, if the bounce looks to be corrective and no like big time frame or a higher momentum bounce, we need to sell it against 142.50. Why? Because this can be complete triangle, and then the trust for the triangle can be taking place in a corrective wave, the same way that these 2 waves were corrected, and they were in 3 ways, like you guys can see right there. So those are the 3 options that we see in the euro, in the dailies and the weekly chart. Still, the move from 142.47 should end either today, tomorrow, or Sunday, and a bounce of at least 300 and 400 picks should happen within the next 10 days. With that in mind, guys, again, happy Thanksgiving to everyone, and see you guys during that day later on. Thank you.